never invest in something that you don't know about. Always do your research. So, picking up those little pieces as you're doing it, every trade become a better trader.
Hello, everyone, and welcome. Joining me today is Grant Newell. Grant is an entrepreneur and financial professional that specializes in royalties, investments, tax strategies, and CFO consulting. Now, he is the co-founder and CEO of AbundantX Inc., AbundantX Royalties, and AbundantX Investments LLC. Now, as the CEO of AbundantX, Grant has been at the forefront of optimizing accounting efficiencies, devising cutting-edge tax strategies, exploring innovative investing, and promoting financial education. Now, under his leadership, AbundantX has earned a reputation for delivering exceptional results and building meaningful relationships with clients and colleagues. So welcome, Grant, to the show. And just first, tell us a little bit about yourself and how you got into trading.
Yeah, thanks for having me on. It's an honor to be here. And, I think it started from when I was a young kid. My mom always loves to tell this story. I was probably about 5 or 6 years old when she told me that, okay, you have $1, you can go down to the garage sale and get you something. So I fell in love with this Eiffel Tower picture. Don't know why. I was 5 or 6 years old, and I fell in love with this picture, and it was $5. So I came back home, and I was like, Mom, I need $5. I only got one. And she said, okay, well, you only got $1, so you got to figure it out. And so I had to go back down there and negotiate. And sure enough, I came back home with the Eiffel Tower. I couldn't tell you how I did it, but I learned, man, I love the complexity. I love the game of finance. And from there, it kind of went on to starting a lawn mowing business. And, that I employed my brother, my cousin. We kind of grew it over time. And then I went off to college. And as you can tell behind me, I'm a big sports guy. And the dream was to play in the NFL. And so I started at Abilene Christian. They had some coaching changes and stuff. And so I ended up leaving there. And I went to junior college out in California. And, if anybody's seen the Netflix documentary Last Chance U, they haven't done any California ones. So I'm waiting for that. But we had about 12 guys at the time in a 1-bedroom apartment trying to figure out, okay, we all had this dream of playing college sports. And so from there, I went to Oklahoma State, and I turned down a Division II offer to be a walk-on there, which really taught me how to work hard, because as a walk-on, you have to be even better than the scholarship players to get on the team. And eventually I worked my way into the starting lineup my senior year. And not only did it give me the Division I experience, but it also gave me my wonderful wife. So I got double bonus there. But after college, I had torn my labrum my senior year, and so I didn't really get the opportunity to go play in the NFL like I had hoped. And so I was back to square one, had no idea what I was going to do with my life. So I went to go be a lifeguard at Lifetime Fitness. And so I know you're like, okay, how did you get into finance from being a lifeguard? God has a funny way of working out our lives and orchestrating things. And so a pastor at church had said, hey, you told me you were good at math. There's this guy looking for a finance guy. I think you should interview. And so I'm like, okay, I guess I'll interview. And I walk in, and the first thing he tells me is I'm a Harvard MBA. And so I'm like, oh, great. I got general studies from Oklahoma State. I should probably just leave now. And so, we went through the normal interview questions, and then he was like, I'll give you a proficiency test to, kind of see what you're like in accounting. And so they gave me kind of a quick rundown of QuickBooks, and they said, okay, here's 300 transactions. Go through them and let us know when you're done. So it took me about 45 minutes, and I thought I had taken a long time, and they were like, "You're done?" And I was like, "Yeah, I'm done." So I'm thinking in my mind, like, oh, most people get this done in like 30 minutes. I took way longer. And so they were like, okay, we'll let you know how you did and see if we want to hire you. And so I didn't get about halfway home before they said, hey, you got the job. And so um, I got the job with the Joseph Group, and they are a CFO services and financial accounting company. So that's kind of how I got my start. And out of that, I just learned to always say yes to clients and always be receptive to what they're needing. And out of that is where I started the royalty business. And one client was getting these royalty checks. They were like, we have no idea what to do with this. And I was young and was like, I'll do it, having no idea what I was doing. And so I ended up taking on that, and they ended up becoming a great client. They ended up doing really well in the music business. And so I started getting referrals, and it just grew from there. But about that time was when I started to get interested in investing. I had a friend that was like, hey, you should buy Bitcoin. And this was back when Bitcoin was like $200 a share or per coin. And again, being young, not having any experience, I was like, I'm going to put all of my savings into Bitcoin. And so I did that, and it grew to like 18,000 was when I sold it. So I'm now looking at hindsight, it went up to like 60,000. So I missed out on a lot. But really where I learned to be diligent with investing and starting getting super serious about it was when I had sold my Bitcoin. There was this thing called BitConnect, which turned out to be a Ponzi scheme. And now, finally, I think 5 years later, now they're giving settlements back on this. But at the time, I was like, this is great. They're lending out my money. I'm getting daily returns. This is great. I'm super good at this. And all of a sudden one day I logged in and it was all gone. The cease and desist was there. And so that's when I learned, okay, I need to get super serious about investing and trading if I'm going to be serious about this, and I need to research stuff. And so that is really where it started for me. And learning through that difficult moment of like, oh
Yeah.
my gosh, I just lost my whole life savings at the time on this. I need to figure out a better way to do it.
Wow, that's a great story. I love that. And just going, where you were to where you are today, really helps set the stage. So where are you based?
So my wife and I were in the Dallas Fort Worth area with our two little dogs, Lila and Finley, and yeah, we've been here for gosh, almost 5 years now.
And so you said you kind of got to this point. So I guess how and where did you learn to trade?
Well, like most people, through YouTube, I now looking back at it, I'm like, man, why didn't I study this in college? I would have just been so fascinated, more into the college classes. But I think YouTube was kind of there's so many people on YouTube that are teaching the fundamentals, and through reading, a lot of it I would take from T. Boone Pickens, Warren Buffett, Ray Dalio, reading their mindsets on how they invested,
Mhm.
what, you know, success leaves trails. And so I always tried to say, okay, I want to find the most successful people and learn from them. And so I took down everything they said, time by time, and growing the principles over learning experiences. Like with the Bitcoin, I was like, okay, never invest in something that you don't know about. Always do your research. So, picking up those little pieces as you're doing it, every trade you become a better trader.
Yeah. And how long did it take you to get profitable?
Well, I would say it was probably about a 3 to 4 year journey of figuring out, okay, where's the sweet spot? Because you have people that are short sellers, you have people that are long term investors, and I think it's more about learning about yourself and what you can do. Some people they can hold a trade for 5 years. Some people, their personality can't hold a trade for longer than 5 minutes. And I think it's more about learning about yourself and where your sweet spot is, because fear and greed are very powerful. And, you know, once you start to let those come in, is when you start to get in trouble with trading. And for me, I think I found that I really enjoy shorter term trades rather than long term trades. Yes, you need a combo of both once you get to a certain amount. But for me and my personality, I'm like, okay, let's grab this one, let's ride the wave for as long as we need to, and then let's move on to the next one. And that might come from football, being that the plays are about, you know, 3 to 6 seconds a piece, and then you come back, start back over. And so I think I figured out that was my sweet spot in it. And as I've grown, I've had to add different strategies in there. And my wife is incredible with emotional intelligence. And so I definitely attest being able to adapt to the different market situations to her, because she has helped me become emotionally, like, figure out, okay, after this trade, I realized I was a little greedy on that, or I wasn't patient enough for my entry. I could have gotten a better entry here. And so um, basically breaking all of that down and figuring out, okay, here's what I need to do next time. And like I said earlier, every trade that you take, you become a better trader, because you've either learned through a win or you've learned through a loss.
So, how did you find out about prop firms and how did you find out about Fidelcrest?
Yeah. So, it, I was thinking about, like, okay, what do I do to be able to save on taxes was kind of my big thing. Really, there was two main factors for me, and the first one was, how do I help on taxes, and that's goes to the accounting firm and tax firm that I have. Always trying to figure out, okay, what's the best tax strategy? What is the best type of account to get tax strategy? And then the second one is leverage. Being able to use leverage, more money than what you currently have, to make bigger returns. And so, if you're in the U.S., we have what's called a market or mark to market trader, which is a tax status, but there's a lot of complex rules that you have to do with it in order to qualify. And so it was really appealing to me when prop firms, I found out that prop firms gave you 1099. And so I was like, wow, this is great. I don't have to worry about qualifying. If I only want to make, 5 trades in a month, I'm going to be fine. I'm not going to lose that status, because I can still count my business deductions from those trades, even though I didn't trade, 4 or 5 times a day like you would in order to qualify for that IRS ruling. And so to me, it was really appealing for that reason to start out. And the other one was leverage. You can have, $1 million to trade with and not have actually $1 million in cash. And so to me, that was really appealing, to be able to trade with leverage. But with that, it comes with a lot of risk, and you have to be able to manage that well, and not just, because I think a lot of times we get in and we're like, hey, this is a lot of money. I'm making a lot of money at this time. And it kind of goes to your head, but you have to realize that it's just like managing a $1,000 account. So if you can manage a $1,000 account well and take that same mentality, you can do it on $1 million account as well.
And it looks like your preferred accounts are the 1 million normal and 2 million normal. So any specific reasons for going with the normal strategy over the aggressive?
Yeah, I think for me, it's I have learned that, like I said earlier, greed and fear can take hold,
Mm-hmm.
and when you have that aggressive account, to me, I just felt like it was too much on the greed side, and so I really was like, hey, look, I don't think this is the right fit for me. And always knowing yourself and what you're good at. For some people, that might be great. They might not have a problem with it. For me, I was like, the normal is totally fine with me. And with the normal account, or I think with the aggressive, it was only 500,000 was the maximum. And so for me, it was more about the what I was going to be able to have as far as leverage and size, and rather than like, hey, I need, a 20% stop loss or something like that, I think is what it is. But to me, I didn't feel like I needed that. I was more after the leverage and the account size.
Okay, so a lot of traders tend to go for the lower end accounts prior to moving up to the $1 million accounts. It seems like you were pretty confident and jumped right into the higher end accounts. So, what made you take that decision?
Yeah, so I've been trading for almost 7 years now, and so for me, I didn't feel like it was worth the time to start with a smaller account. I felt like I have honed in on my strategies. I'm a big probability trader, so to me, whether the account size was, like I said, 1,000 or 1 million, the strategy is still the same. And so I figured, okay, why not go for the large one? I have a high appetite for risk. And so for me, it was more like, okay, go big or go home type of thing.
Mm-hmm.
Um, uh, One of my mentors, T. Boone Pickens, he always told me, like, hey, you're going to spend the same amount of time on a small fish as you are a big fish. So you might as well go with the big fish. And so that's always stuck with me in my mind. And so I'm always like, okay, if there's the
Mm-hmm.
opportunity to go for the bigger, I'm going to go for it. And if it doesn't work out, okay, the small one will always be there and we can go back to it. But why not try it? Why not?
Yeah, great point. And your recent payout was a little over 16,000. So what's your preferred trading style or strategy? I know you've touched on it some and kind of just touched on there with big fish, little fish.
Yeah, so I'm not one to take a ton of trades.
Okay.
I usually wait for the bigger trades. So there are some people who can look at the 1 minute chart, the 5 minute chart,
Mm-hmm.
and they can say, okay, you know what, I can find this and I'm going to trade it. To me, I don't like the possibilities of being wrong, and those ones are a lot higher probabilities of being wrong. So you have to take a ton of trades. To me, I prefer the higher time frames, the 1 hour, the 4 hour, and the daily. And I just wait for those to get to what you would call pivot points. So points where, hey, maybe it's been going up and it's pulled back a little bit, so it's getting ready to make its next move up. I prefer to wait for those on the larger time frames
Mm-hmm.
because they're going to be bigger moves and they have a higher probability. So, like I said, I'm a big probability trader. That's probably my math brain, just always wanting to, run all the possibilities through it. But the main things that I focus on is volume and where the current trend has been going. I learned early on, I was like, oh, I'm going to try and, go the opposite of people. I want to be the fish that goes the opposite direction. And what I learned in the market is that unless you're a big fish and you can move the market the direction that you need it to go, it's not usually going to work out for you. So you better get along with the trend and make sure you're trading with the trend. But then also the volume is a big one. And so I usually wait for volume to start to kick in it to start to move back in the direction that it's come to, and just being patient for the entries. I think that's the biggest one. And the reason why a lot of people lose their accounts is a lack of patience. They, see something, or they see other people getting in, and they're like, I better chase after it. And that is the fastest way to lose an account, when in reality you can just wait a little bit, take maybe, an extra couple of days to get in, and then ride the wave up, rather than chasing something and it goes against you, which is what happens to a lot of people, myself included. Early on, I learned, don't chase after something, just wait for, your indicators to show that, and jump in when you need to jump in. And so always trust your analysis, because a lot of times, we do all this work to build out a plan, and we don't end up doing it. We jump in before the plan. We're like, this is a good play, I missed it.
Yeah.
And I love sports analogies, and it's like in football, it's like, oh, the guy was open earlier and I missed him, so I'm still going to throw it there, but then you throw an interception. And so it's like, I should have just waited. And that's how it is with trading. If you're patient with it, you'll have a hard time, losing accounts. And so I think that's a big thing that I learned early on, and it has helped me become a profitable trader.
Yeah, because I was going to ask, what do you look for prior to taking a trade? And do you feel like that's how you manage your risk with that strategy?
Yeah, so the biggest thing for me is finding ways to minimize the downside risk without hurting the upside risk. And that can be a very difficult thing to do. But when you're doing it based off of probability of the moves, like I said, with combining the volume and the trend, I usually wait for there to be some sort of pullback in the current trend. So, if it's going up, I wait for there to be some selling pressure coming back in, and then I'll get in. I typically will not take what some people would call breakout trades. A lot of times the fills just are not very good. And so for me, I'm waiting for there to be some sort of pullback in the current trend for me to get in and follow the continued trend. But once it starts to go in my direction, I'm usually pretty quick to, reduce what my downside risk is. So if it starts to go in my direction a significant amount, I'm moving my stop loss up, so that, the worst thing that can happen on my trade is a break even. And so, I always say you have a couple of options. You can either have a really big win, a small win, a break even, a small loss, or a really big loss. And there's only one that you don't want to have out of those four. So if I can eliminate that one of a big loss, we're going to have successful trading. And so I'm always trying to find ways to reduce that downside risk as quickly as possible without hurting the upside. And that can be pretty difficult at times in volatile markets. But if you can find ways and the probability of it is there, then I'm taking that trade.
Yeah, great advice. And I was going to ask, what advice do you have for other traders that you feel can help, them succeed as a trader and pass the challenge?
So I really think it comes down to knowing yourself. Everybody is very different, and everybody has different styles. Some people, they see $5 in profit and they're closing the trade because they're like, I'm in profit, I better just get out. And you miss out on a lot. And some people, they'll let their trade run into thousands of dollars in profit and hold on to it too long, and then they lose thousands of dollars. And so I think it's about knowing yourself, knowing where your weaknesses are is the most important thing you can do. Because if you know where your weaknesses are, you know where your spots that are going to hurt you are, you can put up safety guards. It's like bowling. You put on those bumpers so that you don't go in the gutter. So if you're like, hey, I'm that person that'll, my ball is going straight in the gutter as soon as I throw it. Okay, put up those bumpers so that you're always guaranteed to hit a pin. And I think the same thing applies to trading. If you know where your parameters or you know where your weak spots are, address those first and then allow the market to make you profits. And, for me, the biggest thing that I learned was patience. I was not very patient, and I had to learn to become patient, and that has really helped me be successful. If you realize, hey, in trading, you can make a lot of money. You really can. But I think that is where a lot of people get hung up, is they realize, hey, I could make $1 million a year doing this, or I could lose $1 million doing this. So there's a lot of risk that comes with it. But if you try not to make that $1 million in your first day of trading, you're going to be a lot better off. A lot of it is, hey, just small increments, small wins. When you break it down day by day, what you need to make in order to have a really successful year, it's not as much as you think. So I think for most people, it's just being patient and allowing those small, consistent wins to build up over time, and being more selective in your trades. You'll find yourself becoming a profitable trader, and you will have a really hard time blowing accounts. You'll have to try to do it.
Right, right. And you make a good point. I mean, in today's world, it's that instant gratification all the time, but this is more of a long game. Like they say, a marathon, not a sprint. So, saying don't get caught up in that. That's great advice there. So what was your experience like with Fidelcrest?
So starting out, I'm always skeptical of, prop firms, and like, how do they work? Are they going to actually pay out? Things like that. You're always concerned about when starting with a new company. And for me, so I started out from that mindset, but working with them has truly been incredible. I have found that they have done great about communication. Their support team is really good, really receptive, and they're very quick too, which is big in the prop firm, because a lot of them you'll have to wait for hours to get a hold of somebody. And I felt like they've done a great job on customer support, and their payout was very quick. It did not take long at all. And so I've had a great time using Fidelcrest, and I really have not had any issues with it. So I'm excited to keep working with them and to keep using them as a prop firm, and see how things continue to go.
And Grant, do you have any like social media accounts or groups where other traders can follow you or get to know more about you that you would like to share?
Yeah. So the main one is my website, grantgnewell.com. And another one is probably my LinkedIn. Those are probably my two most active places you can find me on. I do have an Instagram, Grant G. Newell, as well. You can find me on all the social platforms at that handle. But yeah, I've really enjoyed working with Fidelcrest and trading prop firm. So yeah.
Well, Grant, we appreciate your time and sharing your insights and knowledge with us. Feel free to subscribe to this channel and learn more at fidelcrest.com.